Is a stock market crash coming in 2025? With all the uncertainty surrounding the global economy, it's a question many are asking. But what do the numbers say? What's really behind these crashes? And how can you protect yourself? Stick around as we break down everything you need to know. 1. Is a stock market crash coming in 2025? Here's what you need to know. Let's take a moment to really understand what's going on. The stock market is one of the most unpredictable and volatile entities out there. It moves up and down in ways that are sometimes impossible to predict with certainty. One thing we can always count on, though, is that crashes do happen. The market, no matter how strong or stable it seems at times, has a history of sudden declines, and these downturns can be pretty dramatic. Now, as we look ahead to 2025, there's been a lot of chatter among financial experts about whether or not we're heading into another crash. The question on everyone's minds is, how likely is it that we'll see another market downturn in the coming year? Well, that's a complicated question, and it's something we need to break down carefully. To start, there are a few key indicators that are raising concerns. For instance, inflation has been a big issue over the last couple of years, affecting the cost of living and buying power for everyday consumers. Rising interest rates, which the Federal Reserve has been implementing in response to inflation, are another factor that's making people uneasy. When interest rates go up, it becomes more expensive to borrow money, which can slow down spending and investment, both of which have the potential to hurt the stock market. Add to that the ongoing international tensions, trade issues, and geopolitical risks, and it's easy to see why some are starting to worry about the future of the stock market. Historically speaking, all of these factors, inflation, high interest rates, and global instability, have been linked to market pullbacks in the past. So when we look at the current economic landscape, it might give us the impression that another crash is on the horizon. 2. Warren Buffett's advice: how to thrive during a market downturn. Now, while the question of whether or not a crash is imminent is certainly on our minds, it's important to take a step back and consider what one of the greatest investors of all time, Warren Buffett, has to say on the subject. Buffett, who's often referred to as the Oracle of Omaha, has navigated many market ups and downs throughout his career. He's seen it all: recessions, crashes, booms, and bear markets. And yet he's consistently managed to come out ahead. So what does he say about all of this? Well, one of his most famous pieces of advice is, be fearful when others are greedy, and greedy when others are fearful. Let's break that down. In simple terms, Buffett is telling us that when everyone else is overly confident, taking on too much risk, and pushing the market higher, it might be time to get cautious. On the flip side, when the market dips and fear starts to creep in, that's when it's often the best time to invest. Why? Because fear leads people to sell off their stocks at a loss, and that creates an opportunity for savvy investors to scoop up high-quality stocks at discounted prices. Now let's be clear. This advice isn't about trying to time the market or making short-term decisions. Buffett's strategy is all about long-term investment in strong, well-managed companies with solid fundamentals. When the market is down, it doesn't necessarily mean that these great companies are suddenly worthless. In fact, it's often a chance to buy them at a lower price than usual. So when you see your portfolio in the red, it's easy to panic and think that everything is falling apart. But Buffett's advice is to keep your cool and focus on the bigger picture. Instead of hitting the sell button, ask yourself, is this a quality company? Is its long-term potential still intact? If the answer is yes, it could very well be an opportunity to buy more, while others are too fearful to do so. 3. What history tells us about stock market crashes and recoveries. Let's take a moment to step back and look at history. The reality is, stock market crashes, while certainly frightening, are not a new phenomenon. In fact, they've been part of the market landscape for as long as we've had trading. The Great Depression, for example, was one of the most devastating financial events in history, wiping out nearly 90% of the market's value. Then there was the 2008 financial crisis, which saw the collapse of major banks and a global recession, followed by the sharp market drop we saw during the COVID-19 pandemic. Each of these events caused major disruptions in the market and sent many investors into panic mode. However, here's the important takeaway. After each of these catastrophic crashes, the market eventually bounced back. Sure, it took time. In the case of the Great Depression, it took over a decade for the market to fully recover. The 2008 crash took a few years for recovery to take hold, And even the rapid plunge we saw in early 2020 due to the pandemic was followed by a swift and remarkable rebound. The point here is not to undermine the challenges that come with a crash or the pain of watching your investments dip. But the silver lining is that historically, the stock market has shown a remarkable resilience. It may not happen overnight, and the recovery can often be a bumpy ride, but the market has always found its way back. What we can learn from history is that stock market crashes are a natural part of the market cycle. They're not necessarily a sign that the system is broken, but rather a reflection of the inherent ups and downs that come with investing. And with each crash, there are opportunities for those who are patient, strategic, and prepared. 4. What's the likelihood of a market crash under President Trump? Now let's shift gears a bit and talk about politics. With President Trump returning to office, many are asking, will the stock market crash under his administration? It's a valid question, and one that many investors are curious about. So let's take a closer look at the numbers from his first term. Between 2017 and 2020, the stock market experienced significant growth during Trump's presidency, with the S&P 500 delivering an impressive 83% cumulative return. That's a remarkable performance over just 3 years. However, it wasn't all smooth sailing. Like any market, it had its share of bumps along the way. For instance, in late 2018, we saw a major sell-off driven by concerns over rising interest rates, trade tensions, and uncertainty about the future. Then, in 2020, the stock market took a sharp dive as the world faced the unprecedented impact of the COVID-19 pandemic, which led to global lockdowns and an economic shutdown. But here's the thing. While political leadership and policies can certainly have an effect on the stock market, the reality is that the stock market often responds to much broader economic forces. It's not just about who's sitting in the Oval Office. In fact, the performance of the stock market is influenced by a combination of factors, such as interest rates, inflation, global trade dynamics, geopolitical tensions, and corporate earnings. These elements tend to carry far more weight in shaping market trends than the actions of any one individual, including the president. For example, the stock market didn't crash in 2020 simply because President Trump was in office. The crash was primarily due to the COVID-19 pandemic, a global health crisis that had a profound and sudden impact on economies around the world. Similarly, the market's recovery in the months that followed was driven by government stimulus, actions by the Federal Reserve, and a rebound in business activity, not just presidential leadership. 5. How to prepare for a possible stock market crash. Key strategies for 2025. Now, you might be wondering, how can I prepare for a potential crash? Well, here are some key strategies. First, diversify your investments. Don't put all your eggs in one basket. Spread your money across different sectors, asset classes, and even countries. This will help cushion the blow if one area of the market takes a hit. Second, stay calm. If the market drops, don't panic. Remember Buffett's advice. Markets recover. And finally, focus on long-term growth. Don't try to time the market. Stick to investments that make sense for your goals and risk tolerance. These strategies will help you weather any storm the market throws your way in 2025 and beyond. So is a stock market crash coming? The short answer is, it's hard to say. But by following expert advice, focusing on long-term goals, and staying calm, you can navigate these uncertain times with confidence. What do you think? Are you preparing for a market crash, or are you keeping your investment strategy the same? Let us know in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit the bell for more tips on investing, stock market trends, and financial strategies. Thanks for watching, and I'll see you in the next one.